And if you are among the optimists who say that a trade deal with the U.S. and China is in reach, if you believe that the Chinese government will be able to put forward enough stimulus to offset some of the slowdown that we've already seen in the domestic economy, is there still room to buy?
I would say I'll be extremely cautious. As I said, there's a lot of positives that has been kind of discounted in the markets. So if we move forward, there's this famous, you buy on rumor and sell on news kind of thing. If we do get an agreement, I think a lot of that is already discounted. Now, whether an agreement leads to better sentiment and help the Chinese economy, but that will be months down the road. Right. No matter what stimulus you put in, doesn't have immediate impact. So it'll be a while before we see that flow through.
Dan?
Hi, Haren. Tell me how you're positioning in the market right now then. Are you positioning for risk or are you reducing risk? And how do you see volatility playing out in the near term? Is this a factor to watch?
Yes. The way I think one should position is that as the market hits higher, you should be taking money off the table. And by doing that, you actually are preparing for a more volatile period. At the same time, you are also kind of being more cautious because don't forget, the first, I would say, 5 weeks of this year, I think performances for most portfolios most probably is great. Because equities have gone up, bond prices have stabilized, and in certain cases, emerging market bonds have even gone up quite nicely. So when you look at portfolios, and I wouldn't be surprised when you look at any portfolio for most clients, they will be showing a nice positive bounce after the year that we had last year. So I would say that if you can lock in some of those gains, in the next few weeks, I think we should be doing that, and that indirectly will be us reducing risk in our portfolios.
And what about longer term? Are you more constructive on the outlook for certain sectors over others? Tell us how you're positioning in Asia, for example.
I would say that I think, as I've mentioned before, I think one needs to take a view on the dollar. I think if the dollar, as expected, many people feel that the dollar is showing a toppish formation, it might weaken, then I think emerging markets will see some benefits of that. But again, not all emerging markets are built the same, so I think some will benefit more than others. Now, I think in the case of China, it's getting an extra boost is because if it's slowing down and if the Chinese follow the normal playbook and start stimulating the economy, the stock market is usually an indicator that confidence is coming back, and they tend to run. So we still remain overweight in China at the moment. And at some point, depends on how the markets perform. And if we do get an agreement on this so-called trade issues, then that extra boost, that's when we will pull back a bit.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.